All right, good afternoon, everyone. My name is Joe Bacella, Director of Client Success here with Chaikin Analytics, and I'd like to welcome you to Avoid Popular Stocks. Find this year's hidden market winners. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. A bit about Sandy. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy is living proof that you do not have to be a financial expert to pick winning stocks. She presents webinars and speaks at industry events on fearless investing by following the Chaikin 5-step method. Sandy is a contributor to NASDAQ.com, where she also hosts webinars on investing. Prior to co-founding Chaikin Analytics, Sandy had her own marketing and communications firm in a career that spanned over 30 years. She's held senior management roles for Elizabeth Arden, L'Oreal, and the Franklin Mint. She's a member of Elevate, a global professional women's network and Women in Investing Network of Philadelphia. Now, throughout this presentation, please submit your questions through the GoToWebinar chat window. Michelle Greenblatt and I will be available here to respond to your questions. As a reminder, this webinar is being recorded and will be sent to all of our registrants. So now to get us started, here's Sandy Chaikin.
Thank you so much, and thank you all for attending Avoid Popular Stocks. Before we get started, I need to get a little bit of housekeeping out of the way, so let me read this briefly. Chaikin Analytics is not registered as a broker-dealer or investment advisor, either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. Chaikin does not recommend the purchase of any stock or advise on the suitability of any trade or investment. The information presented in this webinar is generic in nature and is not to be construed as an endorsement, recommendation, investment advice, or any offer or solicitation to buy or sell securities of any kind, but solely as information requiring further research as to suitability, accuracy, and appropriateness. Users bear sole responsibility for their own investment research and decisions. Well, you can tell a lawyer wrote that. So, now that that is out of the way, I always like to start my presentations on kind of framing the conversation around what is the problem we're all dealing with today. And I think everybody on this webinar can relate to buying stock on emotion at some point in their lives, if not currently. And the research shows, and this makes sense, that people are more likely to buy stocks of companies in the news or companies that they like or know. And I mean, that makes a lot of sense. When you go to, fast food chains, for instance, you're more likely to be investing in McDonald's than in a software company that you've never heard of. So these are some of the companies that our subscribers, as well as Warren Buffett, are investing in today. These are some of the biggest holdings: Goldman Sachs, Alphabet, Google. Apple is not on. Oh, there we go. Apple's on here. Microsoft, Coke. Warren Buffett has big positions in Coca-Cola and Phillips 66. And of course, Apple, he just started investing in last week or so, and that's bumped the price up a couple of points. But just because these are companies that you know and are familiar with doesn't necessarily mean they are the best investment choice. And I'm citing these for a reason, in that our Power Gauge rating, which is our stock rating model, rates each of these companies bearish, which means these are not companies you want to own. And here's why. If you look at the one-year performance and the year-to-date performance of each of these companies, you'll see they're all not so good. In a market where the S&P is basically flat for the year, and over a one-year performance view, comparing it to the S&P 500, the 1 year is up 4%. I'm sorry, minus 4% for the year on the S&P. So all of these stocks that are popular and companies we've all heard of and are in the news are underperforming the market, and these are not the choices you want to be making for your investment account. But just to put this in a little bit of perspective, the S&P 500 has grown approximately 10% a year on average over the past 20 years. But research shows that individual investors have only averaged a 2.5% increase. And that is because people buy on emotion, not fact. We're all human beings and we're subject to our emotions and our feelings, and it's hard to put them out of the way and make rational decisions, particularly when it comes to your money. One of the other reasons is that the research shows that on-air recommendations are not really backed up with sound data or back testing. And the personalities and the emotion of the commentator can influence what he or she is saying. And this bears out in that roughly, over 86% of analyst recommendations have buy ratings, and they're wrong 50% of the time. So, where do you go? I mean, where do you go for your information? This is not a great picture. Stocks that are popular that you know of aren't necessarily a good choice. What they're saying on CNBC and the TV is not necessarily what you want to take to heart. Analyst recommendations also are not particularly reliable. Add to that actively managed mutual funds are grossly underperforming the S&P by 81%. And that's kind of a dilemma. Where do you turn for your advice? Well, our solution is what we call bullish rated stocks, and these are the hidden stocks that I'm going to be showing you today. Most of the stocks I'm going to be recounting with you today are stocks that I own or have owned, and I walk you through my methodology for how I knew to not only that stock on my radar screen, but how I knew when to buy it and when to sell it. And those are all part of the 5-step process that we're going to be going through today, so that you'll come out at the end of this session knowing how to find these bullish rated hidden stocks. I call them hidden because you probably never heard of these firms, potentially Herman Miller because they're office furniture, but certainly I doubt anyone here knows of NCI Building Systems or Centa or Atmos Energy, for instance. Yet these are all big winners. Here's what the hidden winners have been doing for the last year. I mean, huge gains, 20, 24%, 16% year to date in a market that's flat. Also, if you look at them over the past year, you can see how they perform compared to a S&P 500 index fund, which is down 4%. So these are the stocks that you want to be in, right? I mean, does that make sense? I mean, who wouldn't want to own this over, say, Apple or Microsoft? It's kind of a no-brainer. So my promise to you is that you're going to discuss simple steps so that you can stop following the crowd and find the hidden winners. And what are you going to do with those profits? Well, certainly put some of it towards your retirement account so you can be comfortable in your retirement, but also I'm sure you want to celebrate along the way, as do Mark and I. And what we have done is taken profits from my stock market gains and funded vacations over the last several years. So the top picture is Mark and I in Turkey. We went to Istanbul for a wedding and added on a week along the coast of the Aegean, which is what you're looking at in the top right picture. Last summer we went out to Vail for a International Performing Arts Festival because I'm a big fan of the performing arts. And on Friday, it's finally here, we're going to Rome for a week. And these vacations are paid for with profits that I've made on my investments in stocks. So why should you listen to me over the next hour? Well, I beat 4 out of 5 pros and the S&P since I started investing in stocks in 2012. And that's only, 4 years ago. So, you really don't have to be, mired in the stock market and to be considered, a stock market guru to be able to find winning stocks and invest successfully. I've been trading successfully and investing successfully since I started in 2012. Last year, for instance, I found American Woodmark, which was up 98%, and Activision, which was up 94%. And I was invested in both of those funds. Again, that was a year, the S&P was down on the year. I mean, this year so far, I'm in Centa, which is up 36%, Knoll up 24%, and NCS, which is a building company, building products company, up 24%. Those are probably stocks you've never heard of, nor had I. Yet those are the stocks that I could find with the system and the 5-step methodology I'm going to share with you. And I do this all in 15 minutes a day. You know, if you, I work full time, and I don't have, you know, the full day to be watching investments, but I don't need to with the methodology that I've developed. That's not necessary. So let me just take you back a minute to how I started investing in the first place. I started when I started working. Actually, I was in New York working for the cosmetic business for Elizabeth Arden and L'Oreal, and then moved to Philadelphia and joined the Franklin Mint. Now, with each of those companies, they offered 401k plans where they gave me a choice of funds that I could invest in. And I fortunately invested in some really good ones. Fidelity Magellan Fund, which is still the considered the number one most successful fund ever. And Legg Mason, which was Bill Miller's Value Trust, which also was an excellent fund with really handsome growth rates. So that worked out really well. However, as my career got busier and busier, and my 401k plan grew, I didn't feel confident that I could make good investment decisions going forward. So I felt I needed to turn it over to a professional. And in talking around with some of my friends, they recommended a wealth manager whom I engaged and turned my investments over to him. What he did was he sold the funds that I was in and immediately put me into 8 or 10 mutual funds of his choice. And Mark says that's a pretty typical standard with what happens when you go with a wealth manager. But then along came 2008. And I don't think I have to remind anyone what happened in 2008. But I remember calling my wealth manager back in September of 2008 saying, wow, you know, everything is really pointing down. Don't you think we should start selling some of these mutual funds? And his answer was always, oh no, you know, just sit tight. They'll all come back. Just hold on. And I didn't have the confidence to overrule his decision. And that's why I dwell on this now and relate this story to you, because first of all, I don't ever want to have to go through this again. And if I can encourage any of you to be involved in your own financial planning, whether you use a wealth manager or not, that's my goal. Is because unless we take control, we really we're not doing ourselves a good service. I worked years building up this retirement fund, and then to turn it over to somebody else and say, here, it's yours now, is really kind of dumb. So I'm not going to do that again, but the lesson that I learned after my account went down 40% was pretty harsh. I'm going to pause here and ask that you just put in your chat window, if you will, if any of you had a similar experience and can relate a similar story or relate to this story. So if you could just put it in your chat box, that would be great. Chris, I'm going to ask you to come into my office, if you would, please, on our team, because I'm not seeing the chats. And Joe or Michelle, can you read off what the folks are saying?
Yeah, let's see. We're seeing a lot of yeses coming through here. A lot of yeses, actually, from most people. Tom here is mentioning he's had a similar experience. Anisha says she hasn't, but she can only imagine. But for the most part, we're seeing a lot of yeses coming through here from the audience.
Okay. Okay, great. Thanks. Just give me 1 sec. Yeah, I'm just trying to get to the chat, and it's not there. All right, well, let me keep moving here. So this is how I felt. This is how I felt, which was not great. And now I'm seeing the chat window. So thank you, Chris. This was hard. This was a horrible feeling, and this is why I don't ever want to go through this again, and want to help you avoid this at all costs. So what that lesson learned, though, taught me rather, was that I became really resolute about taking control of my investments. And I said to myself, you've managed everything else in your life. You've got to overcome this lack of confidence about investing in the stock market and learn to do it yourself. So I have done that with Chaikin Analytics. And I brought the account portfolio back over threefold of what it was when I took it back in 2009. But I know we're all facing a lot of challenges, and many of you probably are not achieving the type of results in the stock market that you would like to, and that's why you're sitting on this presentation. So if you will, take another minute, please, and just type in and let me know what it is that's holding you back. What makes you pause from pulling that trigger on a stock that you are considering buying, or on a stock you already own and you're considering selling? Yeah, fear. Monique says fear, past failure, lack of confidence, says Becky. Lack of confidence in my system, lack of knowledge. Yeah, every time I buy it goes down. Not familiar with analytical methods. Got burned too many times. Knowing when to sell, past failure, want the best price, so waiting. Yeah, these are all the typical challenges that I hear on the presentations that I've made over the last several months, particularly this year when there's been so much up and down and back and forth. Buying in stages and usually less than fully invested, too many choices. Yeah, information overload is a biggie. Okay, this is great. Thank you all very much. And what I'm going to do over the course of the presentation is address each one of these concerns and challenges that you're all listing out here. So the solution to the problem is to use Chaikin Analytics Financial Freedom Fast Track workstation, and that is the workstation that I'm going to be going over today, using the examples from it, and that will allow you to be confident versus fearful and invest with confidence. So here are the 5 steps on how you can find those hidden winners and avoid those popular stocks and all the hype in the news. And we're going to be going through each of these steps one by one. So let's start with a proven methodology. And many of you said you don't have tools you can trust, you don't have analytics, you don't know how to use analytics. You don't have to. The Power Gauge rating basically is a model that my husband Mark Chaikin created. And what it does is it looks at the potential of a stock to out-earn and perform the market over the next 3 to 6 months. You can see here it's a very simple rating, but there's an awful lot going on underneath the surface than what meets the eye. But this is a Power Gauge rating, say, for Atmos Energy from a few weeks ago. And the model takes into account these 4 basic components. And within each component, there are, again, 5 factors. So the model is based on 20 factors. And the way this came about, the way Chaikin Analytics came about, really was after that whole 2008-09 meltdown. Mark and I got together in about 2009, and he could see my distress, and he could see that I had taken the money out of the wealth manager's control and put it into a self-managed Vanguard account and parked it in an S&P 500 index fund until I figured out what to do. And I wasn't alone. There were literally millions of people that had taken literally billions of dollars out of traditional brokerage firms, and we're now managing the money ourselves. We didn't have the tools, and we didn't have the know-how or the education. So Mark, who had created tools for Wall Street pros in his entire career, over 40-some years on Wall Street, said, I'm going to come out of retirement. He had sold a company to a division of Reuters and had been retired for 10 years. But he said, I'm going to come out of retirement and take the same type of tools, create the same type of tools I did for the pros, but do it for individuals in a way that you can understand. So rather than all these spreadsheets and graphs and charts, he created this model. And as you can see here, it's a very bullish rating. So at this time, Atmos Energy was saying this stock is likely to outperform the market over the next 3 to 6 months. Now, if you wanted to drill down on any of these factors, you can. You can get a power gauge rating for any one of them. You can also get a power gauge rating, as you can see here, for, say, any of these 5 rolled up factors under financial metrics. So if you're a Warren Buffett type of investor, you would focus more on the financial metrics side in these 5 factors. Jim Cramer, on the other hand, looks at earnings, as a big component of his analysis. So you might want to drill down, if you invest like a Jim Cramer, on these 5. I've highlighted 3 in red that are the ones that I basically drill down on. Other than that, I really just look at the overall, 4 components, and of course starting with the overall rating. And if I'm going to buy a stock, I want to be rated very bullish. I mean, after all, you might as well go with everything going for you. Go with the most wind at your back as you can. So I don't even consider stocks necessarily that are bullish. I want them to be very bullish. Time. A number of you said you are on information overload. There's too much information out there to sort through, and nobody has the time to do what you would like to do every day, let alone research stocks. So I'm going to call out a number of the testimonials that we get from our subscribers, and during the course of the presentation, Cheryl gave us this one saying, there's not enough time in my day to do the work Chaikin puts before me in minutes. And that is what the beauty of the power gauge is. So rather than going to 20 different factors, if you could even find them on the internet and know how to analyze the data that you're getting, that work is done for you literally in minutes. Now, why go with a model? Well, I think the fact that I told you early on that individual investors have only performed at a level of about 2.5% a year over the last 20 years, where the S&P 500 has performed at a rate of 10%, is based on the fact that individuals base their investment decisions on emotion. Model, it's much better to base it on an objective model. And as James O'Shaughnessy says here, models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. And that makes sense, doesn't it? I mean, we're all human. So you can't get away from the fact that even though as much as we'd like to think that we are very objective when we're looking at data, we do put our emotions, into it. Now, why should you depend on the power gauge rating? Well, if you were to look at the last 15 years, 16 years actually, if not only real-time back testing, real-time testing, but back testing, if you only invested in very bullish stocks, each year your portfolio would have had an average return of almost 20% a year. If you only invested in bearish rated stocks, you would have been down. You would have been up, only about 3% a year. So you can see there's a big swing there, and you obviously want to go with stocks that are rated very bullish. Now, we have money under management currently with the Chaikin Power Gauge rating, so it is objectively managing money. NASDAQ came to us a couple of years ago, and we're intrigued by the Power Gauge rating. They tested it every which way to Sunday, and they asked us to create 3 indexes based on the Power Gauge rating, where we took their large cap, small cap, and dividend achiever indexes, looked at those stocks through the lens of the Power Gauge rating, eliminated all the neutral rated and bearish rated stocks, and left only those that were rated bullish. And those indexes have significantly outperformed their benchmarks over the first 2 years that they've been in existence. Now, First Trust, which is the largest provider of unit investment trusts in the country, which are very similar to mutual funds, then watched what NASDAQ was doing, and they came to us and they said, gee, this Power Gauge looks pretty intriguing. can you create a portfolio of 20 stocks for us to market as a basket of stocks? They call it a first unit investment trust. And that's exactly what we've done, which was launched in December. Now that unit investment trust is able now to be sold to money managers. It's the first time money managers have been able to invest in a portfolio of stocks based on the power gauge rating. So if you're an individual investor and you are interested in having a basket of stocks managed objectively by the power gauge rating, you can talk to your investment advisor or ask one of our customer service reps here how you can invest in that first unit trust. Because you can't, as an individual, do it. You must do it through a wealth manager. So if that's not enough credibility for you, we are used by many pros, Soros Hedge Fund, Paulson Hedge Fund, Fidelity Investments. All of these companies use the Chaikin power gauge rating when they're evaluating stocks. We've also been quoted and seen on all of the major media in the financial news section. So I'm now going to move on to how do you identify those hidden winners? What's the criteria? But before I do, let me just take a second here and ask you if you'll just put in the box, in your chat box again, if you're understanding the power gauge rating, because it's critical before I move on that you understand the value of the power gauge rating, because it is the foundation of everything we're going to be talking about going forward. Lots of yeses. Understand. Yes, 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 yes. Okay, cool. Well, I'll move on. So this is a really important step, and what you might want to do is get out a piece of paper and a pencil, because in this segment I'm going to give you a number of stock ideas, and these are stocks you may want to put on a watch list. Because these are going to be those stocks that are rated, as classic bulls by our system. So we have criteria that you can see here that I require every time that I consider buying a stock. These things all have to line up. So let's look at this more carefully here on a stock. Okay, Atmos Energy. This stock I bought and sold. Now, you can see the power gauge rating along the bottom. This is this ribbon here, this green ribbon. You can see that this power gauge rating turned bullish back in August and remained bullish until just a couple of weeks ago, about a week ago, and when it turned to neutral. So that's step number one, is that if you're going to invest in a stock, you want that power gauge rating to be at least bullish, preferably very bullish. This is relative strength, this kind of red-green heat map here. What this does is this measures whether this stock is out or underperforming the S&P 500. The S&P 500 is a benchmark against which I judge myself. So whenever I'm investing in a stock or at a certain point in my portfolio in the year, I always comparing myself to how am I doing against the S&P. Because if you just want average returns, then just go into an S&P 500 index fund. If you want above average returns, then this is what you need to do. Stocks that are going to be outperforming, and that's showing you this green here. I'm going to come back to overbought, oversold, and I'm going to move ahead now to the Chaikin money flow. The Chaikin money flow is an indicator that Mark created some 35 years ago for the pros. And it's on basically every technical analysis package and charting package worldwide. And this is what really gave Mark his name on Wall Street, so that everyone on Wall Street really knows the Chaikin name, particularly from the Chaikin money flow. What this does is this measures money coming in and out of a stock by the pros. So you can see these big periods of green here. This means professionals are buying the stock. And what typically happens when professionals are buying is that the price goes up, and you can see that correlates. You can see here where it's kind of sort of, a little bit of buying, it going kind of sideways, and the minute this all starts bumping up, you can see the spikes in the price. And that's because there's more demand for the stock. And if there's more demand for a stock, the price is going to be bumped up. Likewise, when the money is coming out, as you can see down here, there's less demand for the stock, so therefore the price goes down. All you really have to remember is you want green, green, and green. And that's basically the formula for buying a winning stock. You also want the price to be trending up, not trending down. This orange line here is a 200-day moving average. So you obviously want to be buying a stock that's going up. These triangles here are signals, buy signals. And we have 6 pairs of buy signals based on different criteria and correlating sell signals, which are red. And these I'm going to cover in step 5, but I'm going to be pointing them out along the way because these are really helpful to identify when to get in and out of a stock. So let me just spend a moment here on Atmos Energy to walk you through my methodology. This had been on my watch list, and I'm going to show you why on the next slide, but suffice it to say, I had it on my watch list as far back to when it was 64 back at the end of December. End of December back in here. And I bought it here March 1st when it triggered an oversold buy signal at 69. And then I wrote it up, up. And then when it got up here, when it's up to this kind of upper volatility band here, you see these dotted bands, that's kind of the margin within the price that the stock will basically trade. When it starts bumping up here, I think, well, maybe I should start taking my profit. And there was still a lot of money coming in, so the price was high, but you can see it was starting to trickle out. The relative strength was not as strong. And so I thought, well, I'm just going to take my profit now before they report earnings and get out at 74.5, which I did. Power gauge has since gone to neutral last week, and it's now pulled back to 72. So that shows you really how to buy and sell a stock using this one example. The power gauge right now is neutral. I'm not going to get into the plus or the minus, but suffice it to say it's neutral. And so that really confirms that the decision I made a few weeks ago to sell this stock was the right move. So how did I find that stock? I told you I found it back in the end of December. And we have what we call a screener, which is what you're looking at here with the factors filled in that I feel are important and that reflect that classic bull pattern that I just showed you. So you can plug in any of a million types of criteria and screen for stocks that fit that criteria. So for me, what I do, I plug in, I want the stock to be in strong industries, and that's going to be one of the steps I'm going to walk you through in step 3 of why that's important. But suffice it to say, you want stocks that are located in strong industries. You want the power gauge rating to be bullish. And then these are those 3 factors. Remember those 3 factors in red: price to sales, insider activity, short interest. I want those all to be strong. And I'll tell you why. The price to sales is what you're willing to pay for $1 in revenue. And some of these overvalued stocks are way overvalued, and people are paying way too much for $1 of revenue, so that it's going to take forever to pay yourself back from that buy price. So you don't want that to be bearish. You want that to be strong. Insider activity is insider buying. There's a lot of places you can find insider selling, but very few where you can find what the insiders are buying. And this insider selling really can be misleading, because insiders could be selling because they have to come up with a tuition payment, or they needed to buy a new car, or they need a down payment on a house. They could be selling for a number of reasons, but there's only one reason why they buy, and that's because they think the stock is going to go up. So I look at that because I want that to be bullish as well, or strong. And the short interest are the short sellers. This is the activity of the short sellers, and I want that to be strong, meaning bullish, meaning they're not selling the stock that I'm looking at. Short sellers are considered the smartest guys on Wall Street, and they're betting on a stock going down. So it's a little bit confusing because it's kind of counterintuitive, but just remember, you just want these factors to be green, not red, strong, not weak. But you can see what it does to the universe. I'm now down to 30 stocks. I started out with a universe of 5,000, looking at only strong industry stocks and strong industries. I got down to 589. Now I'm down to 30, and now I'm also asking for stocks that have a strong money flow and a strong relative strength. Those are the two indicators we just looked at on Atmos Energy, and I'm down to 8. And that was the criteria that I plugged in December 29th and got this list of 8 stocks. You can see Atmos Energy is at the top at 64. I sold the stock at 74. So, if I'd bought it earlier, I would have done even better. As it were, I did okay with the stock for the number of weeks that I held it. Another stock that I bought from this screener is Bruker. And what I did once I got this screener is I could put these 8 stocks into a list in my workstation and labeled it 1229 screener. And then I could flip through the stock charts and see which candidates I was interested in. Bruker was another candidate that I was interested in. So I got it back here late December when it was right, I guess right about in here. And I put this on my watch list as well. And then I got this buy signal here, February 16th. It's a relative strength buy, this triangle here. And so I bought the stock at 23, right about in here, where that yellow arrow is. And then you can see here when I bought, I was waiting for the money flow to really turn positive. It had turned positive back in December, and then you can see what happened when money started coming out. Look what happened to the price. It went down or sideways, even though power gauge rating and relative strength are still strong. That's why I want all 3 lined up before I buy. And they did. You can see money flow turned positive here around mid-February. I get the buy signal, relative strength, saying this is really outperforming the S&P big time. Money flow is strong, power gauge rating is strong, and I get a buy signal. So that's the perfect trifecta. And I bought the stock right in here and had a nice run with it. Now what happened, you can see money started coming out. And look what happens even when these other indicators, power gauge rating and relative strength, are green. When you start getting investors, professional investors, taking their money out of a stock, it tends to go sideways or down. So I said, well, gee, I've had a nice run on this. In 10 weeks, I've made 24%. I'm going to take my profit and leave the party, because here you have the power gauge rating subsequently went to neutral, and now it's ticked over to bearish. So here today, this stock is reading with a bearish power gauge rating. So, this validates the analytics. This is everything you need to know to make a decision to buy or sell a stock and when. It's all right here on this one chart. And that's all you need to know, because I just showed you 2 examples of stocks that I bought and sold, and in both cases, I timed it right. Stock's now down to 26 today, and I sold it up here at 28.50. So this is really powerful stuff, and it's simple enough that I can understand it without getting mired in data. It does all the number crunching for me. So I ran a screener a month ago for another presentation I was giving. plugged in the same criteria, ended up with 14 stocks, put them into a watch list, scrolled through the stocks to see what I was interested in. Actually, I did buy NC, but I'm not using that as an example because of the time. But NCI Building Systems is one that was that popped up, and I put that into my watch list. I basically keep two lists. One is a watch list of stocks like these, as I'm waiting for everything to just be perfect, or for me to sell something so that I have the money to buy it. And then the other list is the 8 or 10 stocks that I own at any given time. And that's pretty much it. Those are the two lists that I scroll through every day, chart by chart, like you're seeing here, to see what's changed. And I can do that on 15 minutes a day. And then I know, because I'm only holding 8 or 10 stocks, it's not an overwhelming number to be monitoring every day. And the watch list, I basically only scroll through the stocks that are rated bullish or very bullish, and when I get to the ones that have turned neutral, I just kind of stop. And I don't need to wander through those. So is this all making sense? Can you guys see yourself doing this? I mean, can you look at this chart, NCI, and tell me if this looks like a stock that you would have bought or would buy now? David says you make it sound easy, but David, it is easy. That's the whole point. It doesn't have to be so complex. Thank you for your screen setting, says Ken. Dave says probably. Okay, we're going to get you to yes, a confident yes, Dave, by the end of the webinar. Kristen, yes, you are an inspiration to help my confidence soar. Perfect. That's exactly what I want to hear from you guys. Thank you. Do you ever factor in the state of the overall market? Sometimes. If it's a big down day and we're having a string of really down days, it's typically not when I'm going to be selling something, but I could be looking to buy something then when, prices are all down a little bit across the board. Bollinger Bands, no, we do not use Bollinger Bands. Looks like the beginning of a classic bull. Okay, awesome. Monica, okay, you all are awesome. You're getting this. This is great. So let me tell you about NCI Building Systems. This is the industry group over here, Building Products. This is ranked number 8 out of 64 industry groups. So this is obviously, a highly rated industry group. And I'll get into why you want highly rated industry groups in a minute, but suffice it to say you want to buy stock in strong industry groups. Building products are going to go up even stronger because the home sales data came out today and it was very positive. So stocks in this industry group, like NCI Building Systems, are going to get a nice little bit of wind at their back. So this was on the screener going back to April 7th, and then as I showed you the screener that I just showed you on April 26th. So it had been on my watch list as of April 7th, which was right about in here. And I was just waiting for the right time to buy, which didn't take long because on April 26th, it triggered this oversold buy signal. And that brings me to this indicator, overbought, oversold, that I told you I'd tell you about later. This is the zigging and zagging of a stock price, basically. Technical term there, zigging and zagging. You want to sell a stock when it's zigging up because that correlates to a peak in price, and you want to buy it once it's down in this trough, which correlates down here. And you can see how that's consistent throughout, wherever you look. Here's a peak here, there's troughs down here. So when you're looking to buy a stock, look at it when the momentum is going downward, because that means it's in a slight pullback. And every stock is going to go up and down. They don't go straight up. So it's just something we have to accept, that the price is going to go down, but that's an opportunity when to get in on a stock like this. as opposed to when it's up here, which correlates with this price of 16. It's better to get in at 15.33 where it is now than it is back here at its high of 16. So I put this on my watch list back in April 7th, and then when I got this buy signal here a few weeks later, I bought it at 15. Now my three factors, this is a chart from today, and the three factors are all still bullish. Short interest, insider activity, and here if I flick back to the financials, I'll see that price to sales is also bullish. So check, check, and check. Everything checks out still today. That's why it's on. It was on a screener 426. It's still on a screener today because everything is still strong. So this is a stock idea. I think this is a great stock idea. Those of you that are keeping pad and pencil of some stock ideas, write down NCS, put that on your watch list, and just watch it for a few days. It is coming down. It's zigging down. Good time to buy. Relative strength is strong. Strong power gauge rating. And there's strong money flow going into the stock. So, and with the home sales report out today as being very positive, it's a good thing. It's a pretty solid statement that building products are going to remain a very positive and high industry group. Okay, so today, or yesterday rather, when I ran the screener, you can see NCS is still on it. So that's validation that everything is still, all these things are lined up without my even looking at the chart. I know everything is good and strong, that I want to be good and strong. But there's also some other opportunities on here as well. So I put these into a list, scrolled through them, and paused on a Flagstar Bancorp. This has a pattern I particularly like because you can see this wonderful rise in price here and a recent buy signal. So here's another stock idea, just from that screener. FBC, Flagstar Bancorp, it's in Banks and Thrifts, which is number 10 industry group out of 64, so it's still in the top 15% or so, which is great. And it triggered this money flow buy, so it's telling you there's a lot of money coming into this stock. At least there was a couple of days ago. So you might want to put this on your list as well as a stock idea. Strong power gauge rating, strong relative strength. It's zigging down, but it's headed back up again, which tells me that the price is going to be going back up again. So if I were to buy it, I would buy this. I would buy this soon. Okay, are you all seeing this? I mean, is that clear? Classic bull. Green, 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 and a buy signal, and a price headed up. It's that simple. More testimonials from some of our customers. Jim says, as of yesterday, he made enough to pay for the annual subscription, so the rest of the year is just gravy. I'm a small-time investor, and I just started trading actively last year. Year to date, I'm up over 54%. That would be great, but it's only been 5 weeks. He just subscribed in January. Thanks to you and the rest of the Chaikin team. So this is doable. Can you see yourself doing this? I mean, a number of you said yes. You can see that NCI was a classic bull. So you're getting it. Eric says he's been using Chaikin for several weeks. This was back early March. He can quickly and clearly see when to go long or short. He's already closed out 2 trades for gains of 70% and 115%. Over the years, I've tried different software packages and programs. Chaikin is by far the most straightforward analysis product I've ever used. Okay, let's move on now to industry groups, because I've been alluding to that as I've been discussing the classic bulls. So research shows that 50% of a price move is attributed to the industry group, and that's why you want to just limit your search to strong stocks in strong industry groups, because you're going to have what we say the wind at your back. And the average stock in a strong industry group will be likely to outperform the strongest stock in a weak industry. So, if you're going to buy something, buy a strong stock in a strong industry group and get get everything going in your favor. Now we have 64 industry groups and we rank the stocks in those by power gauge rating, and then those that have the highest proportion of bullish stocks rise to the top. So right now you can see oil integrated is the top industry group. Business products is the second. And you can see the others, going down to 8 or so in the screen here. But we list, we have a list here of industry groups. So I scroll onto business products because that's strong, the second strongest. And these are the stocks in the business product industry group. Now what I can do on this list is click on this little bell here, and that overlays these alerts, bullish alerts and bearish alerts. That bell overlay I can put on any stock list. I put it on my watch list when I'm reviewing the stocks in my watch list, and I overlay it onto my stock list as well, so that I can immediately see the most important changes that have happened to a stock. So the most important changes are buy-sell signals. So when I ran this, it showed me this date. Sorry, this date's wrong. This was just yesterday. But just yesterday, when I ran this, it was showing a money flow buy signal on Deluxe Corporation, money flow buy on SCS, relative strength buy on HNI. So let's look at those stocks, and let's look also at Knoll, because Knoll is a stock that I own. This had been on my watch list, Knoll, and I'm going to add a kind of a overlay here of earnings. Stocks that are traded on the stock exchange are required by law to report earnings 4 times a year. And when they do, and they come out with their actual earnings and compared to analyst estimates, there can be a lot of volatility, both up and downside. Chaikin analytics, what you're looking at here, can be really helpful, because if everything is lining up as it does here with green on Knoll going into earnings, chances are they're going to beat and exceed the analyst estimates, and the price will spike up. That is typically what happens, and that is exactly what happened with Knoll. This was on my watch list when I went through my stocks on April 21st. We were right in the throes of earnings season, so I put the earnings overlay, which isn't on this chart, but I put an earnings overlay, and it'll show me when a company is reporting and what they did on the last several quarters. So I could see that they were reporting earnings that night. Wow, it was 421 is right here on this yellow arrow. Really strong money flow, really strong relative strength, and a very bullish power gauge rating. So I said, wow, timing isn't great, but when you're dealing with earnings season, the earnings date trumps the overbought, oversold indicator. So I said, I'm going to buy this stock, because I think when they report tonight after the close, that this stock, they're going to beat analyst estimates, and that's exactly what happened. So I sold it the next day, because they tend to spike up 6 to 10%. It's not uncommon, but then they tend to kind of drop back again after that spike, because this is what the sheep are doing. They're all going into a stock that's beat analyst estimates, but guess what? They're late. They're late to the party. You'll get that early warning, like I did back here, to buy it back here before they popped up 6% overnight. So I sold it that next day and made a nice 6% profit. But then I like this, because everything is still lined up. So I thought, I'm going to wait for this stock to pull back, and I'm going to buy the stock back. So last week they had a money flow buy signal and a relative strength buy signal at 23, right in here where you see this green triangle. So I bought it back at 23, and it's still 23. But now I see that today this has just started to tick to the negative, the money flow. So I'm going to watch this very carefully, and this might be something that I sell tomorrow if I don't see this kind of turning around. So that's, that's the methodology that I go through when I'm looking at a stock. And here's my testimonial. When I scroll through my stocks in the watch list on 4/21, I saw Knoll was reporting. I bought it. Power gauge and all the Chaikin indicators were lined up, anticipating an earnings beat. I sold it this morning at 24.06, a 6% profit overnight. I mean, who wouldn't want to make a 6% profit overnight? So here's another stock that I showed you that had triggered a buy signal. It had triggered a money flow buy signal when I ran that screener on my, not the screener, but I ran the alerts view, which shows me the buy signals, the buy and sell signals. I ran that on this strong business products industry group yesterday, and drilled down now on Deluxe Corporation, thinking, okay, maybe I should look at buying this stock. So tell me all what you see. Business products is the number 2 industry group out of 64, so it's way up top. Triggered a money flow buy signal yesterday. Is this a stock you all know of and talk of, and they talk of on CNBC? Not exactly. The primary business is check writing. You're saying, well, who's writing checks today? Everyone's doing them online. You don't need paper checks. Well, they figured that out. 50% of their business is check writing, but they're growing through marketing other services to their customers, and that's now the majority of their business as opposed to checks. They've beat earnings the last 4 quarters, and they next report on July 28th. So tell me what you would do looking at this. Would you buy this stock? Put it in a watch list? Or say, no, I'm not interested. If you'll just, okay, Monica says she'd watch it. Marlouise would buy it. Dave, not strong enough. Omar, Bo, Matt High, David, Michael all say buy. A couple of you say, Ted says watch. Charles says watch. Dennis, okay, I'm going to go with Dennis. Dennis says buy it. Everything's lined up. Most of you are saying buy, and some of you are saying watch, and that's fine. I tend to be more aggressive and like everything here, so I bought it today. So I bought this stock. It's already gone up about 1.5% today because I bought it this morning, and today was a big day. So you get it. I mean, you can do this. You just did. That's really as simple as it is, looking at this chart. Okay, so let's move on to know what to avoid, because it's just as important to avoid losers or know when to get out of a stock if it's tending toward that bearish condition before it does. So let's look at a bearish stock. Well, this is Twitter. They were down 4% this morning when I created this chart. They closed tonight down 2.5%. They were in the news today because they've reported some changes to the way they calculate characters in a tweet, and it was not as good as what Wall Street had expected. It disappointed Wall Street. This stock is down 40% for the year, and I don't think I have to spell out to any of you what's going on here with all this red. And these are the sell signals. This is a stock you do not want to know, particularly going into earnings here. It went into earnings and it dropped 16% overnight when they reported disappointing earnings. But you got the sell signal beforehand. So our subscribers use this to obviously get out of stocks if they're in these. But if you were a Chaikin subscriber, you would never have been in this stock for the last year. Or if you had, you would have been encouraged to get out by these buy signals. Now, many of our subscribers make money on stocks like this by investing in options, and they use these signals to help trigger when to put in options. trade on. And Joe, but I don't have time in today's webinar, but Joe gives webinars every week on how to use options play, which is an overlay, and options makes options simple. And it's now integrated with Chaikin Analytics and part of your subscription. And many of our subscribers, as I say, have really benefited from this. So let's look at some of the popular stocks, because the title of this was to avoid popular stocks. Well, Apple is the #1 most popular stock today, yet it's down 8% for the year. So, and it just triggered a sell signal. So looking at this chart, you can see what's happened. It recently turned bearish, but relative strength had been negative. Money flow for the most part had been negative, and power gauge rating was neutral for a long period of time, almost the last year. But you can see as things deteriorate what happens with the price. You know, you go from outperforming to underperforming the market, it notches down some more. You go to money coming out, it notches down some more. Money going in goes up a little bit. But don't be fooled, because you still have a neutral power gauge rating and a poor relative strength. So this is not the time to get excited back here in March saying, oh, Apple's going up, I better buy it because it's going to, you know, it's on the rise. No, you know, and you get this sell signal here as well. And then when the money flow stops again, kerplunk, you know, they reported earnings, they disappointed, and it plunked down again. Now it's coming up a little bit, but you're getting the sell signal. So, you know, these are what to look for when you're evaluating a stock. Goldman Sachs, Microsoft, sorry, Microsoft was another really popular stock. Again, look at the indicators. This is not a stock I would want to buy, and it triggered recently a relative strength breakdown, and you can see it has broken down. It's underperforming the S&P, and you can see here a little tick to red on the money flow. So the pros are starting now to exit this stock. Power gauge has been bearish for, looks like, a couple of weeks, maybe a month. Goldman Sachs, another stock I wouldn't want to own. And it's only going to get worse now because money's starting to come out. And if you want to see, you know, how reliable these indicators are, look in the past on this same stock chart. What happens when the power gauge rating is bearish, relative strength is underperforming, and the money flow turns negative? What happens? Well, this is what it drops. So this is what's likely to happen now with Goldman Sachs. So, you know, use these to look at the potential of the stock going forward. And you can see by these, by the power gauge relating to this, to the actual trend the stock took, does it accurately predict 3 to 6 months out? Well, yeah. I mean, it's bearish here, it's neutral here, or it's going sideways, it's bearish here, so this is going to be tipping down again. These are powerful indicators, you know, that can really guide your investment strategy. And stick, if you stick to this very simple 5-step method. So I said a number of our subscribers have made a lot of money trading options. Harry has done that many times over. He's up over 17,000 with his options trade on Google, Amazon, and Priceline. It's all from checking the power gauge rating. It's a godsend. I've been a subscriber for not even 2 weeks. You've changed my life. So Harry, that's great. Thank you for your great testimonial. So I've referenced the signals, you know, as step 5. And since I have called them out as we've gone through the stock charts for the various other 4 steps, I'm not going to spend a lot of time on them now, other than to say these are the 6 pairs. How do you find them? Well, this is that alerts view again. Remember what I did on the industry group, the building products? I overlaid this bell, and then I could see the buy sell signals and any other important things that have happened to my stocks. So on my watch list, is telling me Deluxe printing. There's that money flow buy signal that we saw back on, the industry group detail. BlackRock, DFS, United Health, EEFT, these also have triggered buy signals today. So this is how easy it is to condense a universe of 5,000 stocks to basically 5. These would be the ones that I would look at today to say, hey, are these candidates for me to buy? And as I told you, I said yes on Deluxe, and I bought Deluxe. This is also helpful because it's telling me what stocks have crossed over that long term, that 200-day moving average line, what ratings have changed from bullish here, or in the case of Edwards Lifesciences, it's gone to bearish. So these really, in a second, you can get a kind of executive summary on any list, and I overlay this alerts view on my stock list and on my watch list every morning, every night. Scroll through the stocks. That takes me 15 minutes a day, honest. So by now, I hope I've delivered my promise to you of giving you the 5 steps to find the hidden winners and avoid the hype and not get caught up in emotion by using a methodology you trust, which we use as the Chaikin Power Gauge rating, knowing what to buy. That's the classic bull pattern. Buying strong stocks and strong industry groups, which you can identify with a screener or go into that industry group view. Knowing what to avoid, that's the classic bear that you want to steer clear of. And knowing when to buy and sell by using the signals. And this is also that you can take control, because even the pros like Jim Cramer get it wrong. For months, he was talking about buying energy, EXXI is the name of the stock. Our Chaikin subscribers knew not to follow his advice, because look at this sea of red here. And then this is the earnings overlay. It shows you it's disappointed on the earnings, and you can see the sell signals on the way down. So Chaikin subscribers know not to consider that as an option. Now Peter Starr, Peter, I know you're on today too. Thank you for coming. Peter is a financial advisor, and he's been using Chaikin for about a month or so. But he says Sandy has figured out how to make Chaikin even easier for regular investors to find the really good stuff and concentrate on buying and selling only them. I've also decided to get rid of other services I've been using for years because this one makes a whole lot more sense. So a lot of wealth managers use Chaikin. We encourage our subscribers to monitor their portfolios. If their portfolios are invested in mutual funds or ETFs, you can look at the top holdings in that mutual fund or ETF. You can look at the top stocks on the ETF in the Chaikin analytics system. And in the mutual funds, you can get that online or from your wealth advisor, and then just follow that. And if those stocks are turning bearish, you might want to say to your advisor, hey, let's look at getting out of this particular fund. So my promise that I gave you in the beginning was that I was going to show you the 5 simple steps so you can stop following the crowd and find the hidden winners, like we've just identified, and use that money to celebrate. For those of you that came on a little bit late, Mark and I are going to Rome on Friday, and that is thanks to profits I've made on Chaikin Analytics. Rex here went to Hawaii for 2 weeks. Following an Amazon trade. That was a bearish trade. He made money on an option trade, and his profit covered 2 months in Hawaii after taxes, which is pretty remarkable. So we want you to be our next success story, and using the Financial Freedom Fast Track by Chaikin. We've added the screener, as I mentioned, and reviewed, and the options and the earnings calendar, which we did not have time to go through today. But basically, the 5 steps that I've showed you is really the basis of what you need to know to start investing with confidence. Now, Mark here has given us a recent testimonial just a couple of weeks ago. He said he had a 90% average return in his first 6 earnings trades using options play and the earnings features, all very simple trades. Chaikin makes the process fast and efficient, so instead of getting bogged down in due diligence, I was trading. I mean, wouldn't you rather be investing and hitting that buy-sell trigger rather than getting paralyzed in all the analysis and bogged down looking for the information and then trying to make sense of it? JD here says, I'm ready to tell you how absolutely incredible Chaikin has become. It started great, but with the options and screener additions, I feel it's absolutely the best product on the market, and I've recommended your product to his investing friends. Now, I always go back to confidence because I feel confidence, as I outlined in the beginning, is really at the basis of investing. And if you don't have confidence, you're not going to make good decisions, or you're not going to make any decision. You're going to be paralyzed. So confidence is really at the foundation of a good investment strategy. And William here said that Sandy affirmed that I know more than I think I do about how to use the tool. And because she's using it successfully with a similar novice background to mine, that I can too. It was a real confidence booster. So that was my other goal today, is to give you guys confidence, that you can do this. This is not complicated. All you have to do is follow those 5 steps religiously, and you will be reaping the rewards as you've seen on the examples I've shown you. So what comes with Chaikin Analytics? Well, certainly the annual subscription to the workstation that I've been showing you. The options play integration comes at no additional cost. Mark puts out a weekly, what he calls Market Insights. It's a weekly commentary with his view of what's happened this last week and what he sees happening ahead in the next week. And he has very specific stock ideas in there, both on bullish and bearish side. So it's really, we call it done-for-you research. Now, I've highlighted the coaching calls that Joe and Michelle done because I think these are like really remarkable. And when you subscribe as early as tonight, and stay on because we're going to make you a special offer with incentives to subscribe by tonight. But when you subscribe, Joe and Michelle will get you immediately into a small coaching call as early as tomorrow. And in that, he and Joe and Michelle will walk you through the various ways to use Chaikin Analytics and all the bells and whistles that I showed you today. And then if you want more instruction, you can schedule a one-on-one session. And I'm not aware of any financial services company where you can call and actually get a person on the line, but you also can get a one-on-one session, unlimited session with Joe or Michelle to integrate your methodology with Chaikin and how to use Chaikin to the best advantage. And then for our subscribers, we give presentations every other Monday afternoon after the close, where you can ask questions. Joe and our chief market strategist will go through changes that have happened in the market, changes to the analytics, any kind of updates and stuff, and it gives you an opportunity to interact with our team. So in addition to that, we've added the screener, the earnings feature, which shows us when a company is reporting earnings and what they've done, whether they beat or missed previous estimates. And as an additional bonus, every morning you'll get an email letter from our chief market strategist on what he sees going on in the market, again with specific buy-sell ideas for that day. And then there's also a sector performance view. So obviously this is much more than I could review on a presentation like tonight, but Joe and Michelle will take you through all of this when you subscribe on those small group sessions. So normally this comes at a price of $1,950 for the year. we're taking $200 off if you subscribe by midnight Friday. But for those of you who are taking action today and subscribing now, we will give you $100 off the price plus a free video of a free trading video. Joe has put together a whole trading package, which is a series of 6 hours in 3 videos walking through exactly how to use Chaikin Analytics to make the most of it. And we are giving you the first session, which is a 2-hour session, $200 value for free when you subscribe by midnight tonight. So I'll end on this, that for $1,650 you can get an annual subscription to Chaikin Analytics with all of those extra benefits that I've explained, and the $200 value of the free training video. So we hope that you'll join the team, start investing, like the pros, but with a very straightforward, simple 5-step methodology that I've shown you right now. So Joe, I'm gonna hand it back to you. I know you and Michelle have been answering the questions as you've been going along, and I'll turn it back to you to close.
All right. So thank you very much, Sandy. Thank you, everybody else, for coming out here. Like Sandy mentioned, make sure to take advantage of our offer. I know we have Memorial Day weekend coming up here soon, so just about 3 more days left in the market before we hit the long weekend. This is a great opportunity to get in and get up to speed with our program here. So we'd love to have you join us. And again, I really take a great amount of pride in the video that Sandy is sharing with you. This, of course, is from our Chaikin Market Academy, which does come at a premium. We typically do charge about $600 for anyone to attend the 3 sessions here, but we're giving away 1 day of it, the recording of it, live here, free, if you subscribe by midnight tonight. So we'd love to have you join us again. I see there's a lot of questions about how to use our screener, how to understand the power gauge rating more. Make sure to give us a call. It's 877-697-6783. Or you can check out our website, chaikinanalytics.com/Sandy. You'll have that discount applied. But yeah, we'd love to have you join us. So please get in touch with us. We can have you in the door as early as tonight so you can get prepared for tomorrow. On behalf of Sandy and everyone else here at Chaikin Analytics, we want to thank you for spending an evening with us, and we'll see you tomorrow. Thank you.